obviously the energy report that comes out at noon today. Was something else happening today? Did something else happen after the bell today? I really don't know. I don't read or follow the news. Oh, yes. NVIDIA holding up the entire financial system as of right now. And we will be digging into this quite a bit today. I think there may be some people today who have a conversation with you about NVIDIA and why it matters, what we're watching, how it impacts everything from the hyperscalers on down to the S&P 500, all the way through what it will be impacting the Russell. We'll do the runner at 9 o'clock. We have a special guest coming in at 9:10, so get ready for that. But as you know, a day like today, where we watch futures, we see the market kind of chopping around a little bit at the moment. Oil's getting beaten up pretty badly. Huzzah, been waiting for that for a couple of days. But that said, watching the Russell S&P 500, everything's a little green this morning, which isn't a bad thing. But this is all about positioning today. We're going to be paying very close attention to very important strike prices around individual equities like NVIDIA, like Palantir, like all of the big names that are exposed to this. We'll be watching hedging according to the SPY and just kind of seeing where money is positioning ahead of this very critical earnings report. $4.5 trillion company, 8% of the S&P 500, 10% of the NASDAQ, 8% implied move today. And everybody's going to be trying to react accordingly ahead of time. Look, this is all about looking for opportunities, scalping where there's potential, setting up the screens, knowing exactly what you need to know over the next 72 hours, because this is not going to be a sprint. This is going to be a 72-hour marathon built around one name and everything that comes with it and everything that goes with it. This market remains on edge, largely on the back of some of the things we'll talk about in a moment. But if it goes, it goes. If it rallies, it's going to pull everything back up, and we may be looking out 2 weeks from now saying, what private credit crisis are you talking about? That's the size of today. Everybody talks about the Fed meetings. I know I get excited about the Fed meetings, but at the end of the day, the amount of leverage in the system, the amount of capital in the system, everything that is wrapped up to the 1,700 ETFs that own NVIDIA, yeah, it matters. But as we move into today, as I've said, look, we'll talk a little bit about the insiders in a moment, but the reality is we are in extreme red territory. We had one breakout stock yesterday remaining on the list. It was ALB. I couldn't tell you how or why Albemarle became the name that everybody wanted to climb into from a momentum perspective over the last week and a half, but we've gone from 92 to 125. That's it. That's really been the only thing that has really stood out on the S&P 500 in the last week and a half. A lot of weakness. And this is kind of where we get into that contrarian environment of we are in peak fear. We have this entire situation set up where the whole market is kind of hinging on one earnings report. This positioning start to turn around a little bit, particularly given the extreme pressure that we've seen on the Russell. Today is about one name and one name only, and I know you know it. I know you're excited about it. I know Doji's happy. I know BS Smokey is doing what BS Smokey does. Excited for 4 o'clock today. NVIDIA is 8% of the S&P 500, 10% of the NASDAQ. Hedge funds have been trimming their exposure pre-print, which is pretty wild, obviously, given the fact that this market has been driven largely on the back of the AI trade, and not just the high capital efficient businesses that are in this space, but also just the reality that this is where the leverage has been. So as we preview this today, the reality is this. There's a lot going on with NVIDIA. We're going to talk about this ad nauseum at 3 o'clock today. But NVIDIA drives global tech liquidity. It's a significant bellwether for all the CapEx spending. Remember, CapEx is propping up GDP in the United States today. We tend to see massive volume surges on NVIDIA post-earnings. Historical implied moves are 8 to 10%, which is monstrous on a stock that impacts this much of the S&P 500. This is going to impact stocks like SMCI, AMD, Broadcom, Marvel, ANET, Intel, Qualcomm, Constellation Energy, Exelon, Duke, JCI, TTT, Palantir, Snow, MDB across the map. And once again, as we remind you, the earnings actually don't matter so much as the whisper number, which the whisper number is really what the hedge funds are kind of betting on. The hedge funds are betting on a whisper figure higher than the consensus revenue expectation, which is around 55 billion. The whisper number is about 55.5. They are banking on strong Blackwell orders, but here's the more important thing. Where is forward guidance moving forward? Forward guidance. What is NVIDIA saying about 2026? Are they going to guide with over $55 billion? And are they going to guide with margins over 72 to 73%? Positioning is going to be the key trade. A lot of focus on open interest today, a lot of focus on short gamma risk, a lot of focus on unwinding post print, and a lot of emphasis on that really key levels, that 180 level, the 185, and even the 200. Pay very close attention today to the order flow that happens on those strike prices, both calls and puts today. We're going to dig into volume weighted average price later today, talking about that for post market tomorrow, how to anchor volume weighted average price ahead of NVIDIA. And once NVIDIA makes its mark, we'll go through some of the earnings reactions, the last 6 or 7 of them, and we're going to dig a little bit into volume shelves later today. Do not be speculating on options calls once again. Do not be speculating ahead of this earnings. This is about reaction time and making sure that you are prepared for whatever the setup is later in the last couple hours of trading today, and of course, what happens tomorrow. So on top of that, watching NVIDIA, watching the Qs, SMH, and SOXS, SOXX, but somebody just asked about SOXS. SOXS is the triple bear ETF for the semiconductor stocks. Once again, we are holding right under that 50-day EMA. If this breaks above tomorrow, next couple of days, it is a sign of unwinding of these highly leveraged stocks in this space. This is what I've really been focused on the last couple of days. I have been fighting the good fight, trying to short energy against the momentum of this market, and we were right. Oversupply is the bigger story than what is going on with Russia. And the trend was there last week, but Ukraine attacked Russia, and Iran stole a tanker in the Strait of Hormuz. Geopolitical tensions increasing today. Oil is taking it on the teeth. 2.6% move, 6.7% move on the WTI. This is based on private data figures on inventory from my good friends at the American Petroleum Institute. Crude oil breaking down, Brent side, WTI side as well. Natural gas getting a pop today, which actually will provide a little bit of support to some of the upstream producers at a time that WTI is breaking down. I cannot tell you how or why or who is doing it, but somebody is working against me. The 89.90 level, this market does not want to crack under that level. It continues to find the XLE, the energy select sector spiders, continues to just bounce off this level. And it has been doing so to my detriment for the better part of the last week and a half. I need this down around 89 today so I can get out of a position. But that said, looking at the 30-minute, looking at the way that this market operates, when we get down into oversold on both the RSI and MFI, I will tell you right now, set yourself up for an opportunity to look for a reversal and look for covering. My expectation is there's going to be a lot of pressure on the XLE. In addition to the upstream names, I'm looking at Apache. I'm looking at some other names in the space. Apache getting beaten up a little bit today. This has big downside in the event that oil and energy stocks continue to break down. 4.4 million crude increase according to API. We will get the official numbers from the U.S. government later today. Russia's flows have not been limited. We're watching Brent, watching the XLE. Watch the XOP as well. If momentum starts to go, and once again, the OIOU is your friend on this for momentum. If we get under these key moving averages, the 20, the 50, and the 8, looking for downside on upstream oil and gas as we come out of near overbought conditions. In addition, here he is, Jeffrey Gundlach, everybody. Well, Jeffrey, it has been some time. I think I saw a hologram of him speak at a conference once. It was a very strange time to be alive because it was Jeffrey Gundlach as a hologram and then an hour and a half of Dennis Miller's stand up. That was a conference that I attended. I blacked out somewhere around lunch and I didn't even drink. Now, the thing that Gundlach comes out and says, and why this matters, is this is one of the business, people in the world who understand how the bond markets work. PhD, basically coming out and saying, hey, all this private credit is junk. All of this private credit is garbage lending. And there's been warnings about this. We've talked about this. We've focused on the fact that a lot of these institutions, a lot of this private credit is completely and totally opaque. They take money from banks and they lend it out. And then there's no transparency into what it's going into. We've had implosions recently. We have concerns about repo. We have concerns about the structure of the financial system. And Gundlach coming out, kind of laying out this warning today. So now Gundlach, in about 4 to 5 years, will be able to stand up in front of a conference and say that he called the crash of 2026, which is basically all this is at the end of the day. People basically doubling down on what we already know and then pretending to be prophets. That's the beauty of the financial markets. And you just take one sound clip that you have made in the last 6 years, and you can make a fortune off of it for the rest of time. On top of that, only two prices, he says, 100 or 0. And he's saying that it resembles 07 CDO logic, fake marks. So this, again, coming back to mark. What matters? Is this stuff worth 100 or is it worth 0? We just saw recently two private banks or two private capital funds effectively providing capital to the exact same thing, making different marks. One saying 91 and one saying 75. Well, it's got to be one of the two, but everybody has the ability to basically set their own marks and manage their own books. This remains a challenge, and this is why there is so much pressure on the financial markets right now to push the Federal Reserve to try to increase reserves in order to prevent ongoing challenges. Now, this is all about the regional banks, high yield growth, high yield bonds, and Blake and I talking about this the other day. Companies like Ally, all the companies that are insuring, AIG took a beating the other day. Ally's under pressure. Looking at companies like Carvana, all of this is in play. The BDC lenders are under pressure. The regional banks are under pressure. And until we see real action by the central bank to help provide capital support to our reserves, this is going to remain in the background. We may get NVIDIA beating. We may have a short-term pop in the market that runs a couple of weeks. And then I guarantee you the headlines will shift a couple of weeks out where all of a sudden some other lender, some other group, some other shadow group gets under pressure. And now all of a sudden we're having this debate and this conversation again. That was the narrative 2022. We saw this happen in 07 and 08. We saw this happen in 2014, 2015 when we were talking about China. So once again, this is an important narrative for the markets moving forward. It's important to familiarize yourself with the regional banks, with the KRE, with the DPST, focusing on these tickers because these are going to be repeatable trades through the end of this quarter and through next year. Once again, repo stress is rising. They are going to start some sort of operational procedure. This is not quantitative easing. They're going to stress that time and time again. The vice chair of the Federal Reserve coming out and effectively saying that tariffs are causing inflationary challenges, while also not mentioning that monetary policy is actually what causes inflation. But that said, the SOFR has remained above the Fed funds rate, creating counterparty caution. We have liquidity problems. We have challenges coming. Retail is not buying the dips as much as they were while the plumbing is under pressure. looking at the VIX, looking at liquidity, a lot of those surges in the VIX that have transpired, the big moves that have happened since 2008, are tied back to the plumbing of the financial system, and widening spreads will continue to be a trend moving forward. Be aware of this. Understand this. This is how the financial system works. I know it's dull. I know it's complicated. I know that you don't get up in the morning and you're really excited to find out what is happening with the secured overnight funding rate. But I will tell you right now, your entire portfolio and your trading vision depends on this. It's very critical to understand how the plumbing of the financial system works. And it's good that this is finally becoming a mainstream topic, getting away from the traditional nonsense that employed 2020 and 2008. All right. That is my rant. That's all the news. I'm out of here. Big Dave, I appreciate you. It's not a night that goes by that I don't think about the secure overnight funding rate and the odd color that they make their website. What is that? Is that eggshell? What is that? It's a white. It's a pale white that you just don't see anywhere else. It's like a dentist office. It's just something off about these colors. Ugh. Let's get out of here. Let's get to the runner. Oh, wait. Nope. Let's not get to the runner, because guess what, everybody? We've got a huge Black Friday giveaway, and you have an opportunity because, look, these things are already moving, which is awesome because everybody wants Garrett Baldwin credits. Why wouldn't you? So do me a favor. Call 623-244-5657. Code word Garrett. We have new masterminds and trade alerts coming out for 2026. $1 turns into $2. Don't know how to make it any easier for you. 623-244-5657. Code word Garrett, and you have an opportunity to win a Falcon F10 trading laptop. Wish it was a F-35 fighter jet, but it is what it is. 623-244-5657. Code word Garrett. 2 R's, 2 T's. Don't mess this up. Let's get to this. Don't worry, there will be another plug later. I'm just going to warn you. I'm going to sell you some credits this morning. We should get a lunchbox with me on that. That would be great. Just all of the things that it'll just be me sitting on the ground. That's the picture. And then all of the things that I think about.
I want to win that F-35.
There's the voice from the heavens, everybody. We start with ADM. I want that lunchbox. I like that. Just me sitting in a room thinking about the SOFR. That's the whole thing. Just eating a cold corned beef sandwich. SOFR, ADM, waking up. Nothing like ADM, one of the most dysfunctional businesses in the history of the world. Not even activists want to try to tackle the complexity of this one. See, look, there's so many things that you could put on that lunchbox. Getting a haircut. I like that. Archer Daniels. This has kind of moved with broader liquidity and broader momentum, but honestly, I kind of like the setup here because it's so boring. So boring. Everybody just forgets about it. I like the fact that this is kind of bounced off that 200-day moving average. That is kind of where it found its floor. So let's just keep this relatively simple. It's just a spread. You don't have to go too over the top here. You can go out about 60 days. And you go down to around that, I don't know, you can go down to the 57.50 level and buy the 55. And right now, the 57.50 put, you write the 57.50 put for January, buy the 55. That can't be right. That's the strangest math I've ever seen. One moment. That math is way off. How would you do it? Okay. Well, this is saying, there you go. Putting up 172 to make 78. That's correct. Okay. I thought I was looking at it backwards. 45% return possibility on a 72%. You may want to look a little closer going to December. December 19th, 57 is about $1, and the 55 is it'll probably be about 70 cents. If you can fill it, that would require about 482 to make 91. What is going on with these things today? All my numbers are off today. I apologize. There we go. 196 to make 54, 78%. This is the December 57 put. You're writing, buying the 55, putting up 196 to make 55. And you're down here at a break even of around $57, which, by the way, we're kind of coming off. That is under that key 100-day moving average, and we are back above 1, 2, 3, looking for continuation of momentum. Possible move up to 64. Just keep it simple. ED, what do you do? Well, that's not a good word for this morning. ED, utilities, strength, momentum, holding above this line right now. Well, we want to see a little bit of a continuation of this trend. This is going to react to NVIDIA. And this has moved pretty nicely in recent days, despite the fact that most utilities have been under pressure. Hey, same story. Just looking back and finding where these key levels have been, it's been that $96 level. So if you look at ED, Consolidated Edison, they're the ones who are completely screwing up my life right now. Get your money back. You better go get your money back from this group. They will take all of it. They own BGE, and I don't care for them. That said, $100 spread, pretty clean. All right. On top of that, USFD, RXO, and WB. I got somebody coming in the room 2 minutes, so I better get moving, son. WB, well, this is one of my favorite stocks of all time for momentum, but it just keeps breaking down. I want you just to add this to your list because, once again, this is all about following momentum. I've got 97 different lights on this thing, so let me get them out of here. Go back to this. WB, when you get back into a positive momentum environment where that 8 and that 20 pushes higher, that's what you're looking for. This thing will move $3 to $4 off of lows. Let this thing continue to sell off. Look for oversold on both MFI and RSI. We get down here, we're looking for a reversal to the upside. In addition to that, what are your stocks to watch today? It's about Target, and it's about Lowe's, and it's about all of the retail names. We are going to do a full sweep on how to trade reversions off of the earnings reports. Not great. Down year over year, comparable sales falling 2.7%. But this is really all about doing something pretty simple, everyone. And I'm going to wrap it up with this before we bring in Mr. You-Know-Who. TGT, right? What we're looking at here is volume weighted average price. And what we're going to do is anchor this to the very moment that the company reported earnings. And the company reported earnings yesterday at, well, what is that? 631. That's not right. There we go. This morning. Forgive me. Man. 630. So at 630, if we change this, right, to the 19th and we change it to 630, we are going to see the volume weighted average price linked explicitly and heavily to when that report was released. Now what we want to do is look at it compared to that recent low, the first major reaction that we saw after the earnings report. This is where the funds start to play defense, and this is where we start to look for not current volume weighted average price, the anchored to the major reaction that happened at 635. If we can break back above this level, we're looking for a continuation of trend and a move higher. We're also looking for moves off this lower bound. If we get down there, if there is an overreaction this morning, continue to anchor to lows of the day and then watch institutions as they battle. We will do a full hour on a lot of this focus on NVIDIA and some of these other names as we move into the earnings reports that matter tomorrow. Gianni, 9/11. Here we go. Walmart, Constellation owns BG&E, and I pay them hundreds of dollars a month for what I don't know. We're going to figure that out one day. Good morning, sir. How are you?
Good. How are you?
Well, welcome to the chaos.
Oh, yes, it is chaos.
It is chaos, but you know, I've heard somewhere that you like technology stocks. So let's talk about tech because tech has been eaten up a little bit. SOXS, a lot of the semiconductor names are getting beaten up, but This is a reset day that is building into the close today. So give us kind of a preview of what your expectations are and what you will be looking for on a day like today with NVIDIA basically resetting the deck for the next 90 days.
Well, you hit the nail on the head there, Garrett, and thanks for having me on. As usual, semiconductors, this is the longest correction we've seen in the chip sector, really going back into the drop into the low of April. So obviously, NVIDIA, the most important stock in the sector, we are sitting right on technical support here. So this is a do or die level for this market mover. Looks like we're looking for EPS, earnings per share, around 1.17 today after the closing bell. So, if we hold here and complete a higher low, then wonderful. If not, then we got some bigger issues. Some of the other names in the chip space like AMD and even Micron have been pulling back a little bit. Micron's been exceptionally strong. But then you got other ones like Broadcom that still look all right. But, I just really want to circle back to what's been going on in the biotech sector because, it is, I guess, like a cousin of the tech sector. It's an interesting sector because it's kind of marries the healthcare and the tech sector together. And it just doesn't care about whatever's going on right now. But this is like what you want to see if you're looking for an emerging theme, because I want our viewers to think about this. This sector is still going up, even as the indices are dropping. Well, what do you think is going to happen once the indices do have a bottom? What do you think the reaction to the biotech sector is going to be? I think it's going to be even stronger. I think you're going to get the next inning of this rally. XBI, we've talked about this before, still hasn't taken off that high of 2021. I know I talk about this every day now, it seems, but this really is the sector with the most value. And typically when you see healthcare outperforming, it's a bit of a warning sign, but I think the biotech story kind of trumps that, because if you were seeing healthcare outperform with biotech selling off, I'd say, okay, we have some issues. But since you have healthcare rallying together with biotech, this tells me the market has a new appetite for a sector associated with growth, and that sector is biotech. So, I mean, really just amazing setups. The best names holding up in this market and even continuing to go higher remain in the biotech space. So it's pretty amazing to watch this unfold.
I think what's interesting about this is, we talk about tech because that's where the bulk of the capital is flows, simply because of the nature of the way that the markets are structured. But this has actually been one of those things where if you take a step back and you really look at what the two primary trends that have driven this from a headline perspective, one is deal flow. There's been a lot of deal making. The average deal this year is about 90% bigger than the previous year. So these valuations are still doing very, very well. But secondly, you have the policy side of this. Lilly had a huge deal with the Trump administration on exchange, on prices in exchange to sell Zepbound and Medicare. That's been a huge deal. Pfizer was able to do some things by surprise. They've gotten activist investors involved as well. So this is all kind of sliding really under the radar, while all of these other bigger stories are happening with repo, what's happening with tech, what's happening with NVIDIA. And it's just created these tailwinds that make it, again, I'm not a biotech person, but I see it, and I see this as kind of this new normal. We've been looking for deals in banks. We've been looking for deals in the consumer discretionary side. It's really been a lot of M&A in the biotech space that has really helped provide a floor in an environment where capital is looking for a place to go.
Well, and you would think too that if we do see more rate cuts, and I think we will eventually, that's going to increase M&A activity even more. I mean, that stuff isn't always happening with cash. There's a lot of borrowing and debt that's involved too. But I mean, you take a look at some of these Dow 30 names, these healthcare slash, biotech stocks. Amgen,
Right.
you finish the month today, be the highest monthly close in history. The stock's breaking out, just absolutely not caring about the volatility we're seeing elsewhere. And even Merck looks like it's starting to make a comeback. So, this is a sector that kind of against the grain of logic got decimated after COVID. You had to pop in, during the early days of COVID, but really ever since then, it was not the place to be. And, when I actually started in the business in the early 2010s, biotech was the hot sector. It was amazing. It was from like 2011 to 2015. That was, people weren't talking about the FANG stocks that wasn't even in existence yet, or the Mag 7.
Right.
Those weren't really a thing. It was all about biotech. And so it's pretty exciting. But what I have appreciated about this rally is I'm actually going to jump over here and pull up my Trinity terminal. Let's see, is that going to
Yeah.
freeze on me again?
Before you do that, but because I want to look at a chart real quick on the long-term chart, Pfizer. Pull that up real quick. Just humor me for a second.
The Pfizer chart?
Yeah.
Yeah. Pull that up real quick. Let's see. I just had
these are all one of the things I will just note, and then I'll give you the last 3 minutes is we got to remember what has really driven the market in dramatic ways, right? You had all the deals in rare earth, right? You had all the rare earth deals, and then you have and again, it's been government involvement. Trump RX is a godsend to the biotech sector right now, because it's become a negotiating point on the tariffs versus how do you provide low cost drugs. It's one of these things that you go, oh God, I completely forgot that even happened. So that long term Pfizer chart is actually really intriguing to me down at this 25 level with a dividend of around 6.5%.
Yeah, and that's going to be even more appealing if rates go down, right?
Right.
6.5% yield. A 30-year Treasury is paying around what? In the 3 to 4% ballpark range. That's yeah.
No. Take us over to Trinity.
Yeah. No. So okay, let's see. Hopefully, it doesn't freeze up on me again. I don't know why it's been doing that. It's just in this morning.
Yeah, we're gonna lose Gianni in a second anyway. Look at that. He's frozen.
I don't have any issues.
Well, you're freezing up in general. Isn't technology wonderful, everybody? We are hey, they're back. The clouds are back. All right. Biotech is the next big eye. Fire everyone and have AI create all your drugs. Now that sounds quite dangerous. I don't know about that. Gianni's back, everybody. We found him.
Okay, and now you can see the terminal. There it is. Okay, right. So one of my favorite things about the terminal is that it actually breaks down the stocks that are showing the strength according to their sector. And you can see here, you have some sectors that aren't even on the board. But what's absolutely dominating is the healthcare name. And so, there's some amazing stocks. We actually had an open idea here in the Theo chat room on Cogent Biosciences. And unfortunately, the stock left the station with us. We had some ideas open, in mid-October. And then the next thing you know, we wake up one morning and the stock had gapped up 140%. But what's crazy is that you actually go back to like the beginning of October. And that's when you started to see some strength. Back then you still had technology doing well, but the later you got into the month of October, the more and more strength you saw coming from biotech. And this is what enabled us to get in on names like ARQT and INCY. So I'm actually going to jump back over to Thinkorswim just to show you, like some of the setups that we were able to pick up on because of the terminal. I mean, ARQT, this is a stock that, look at what the indices have done over the last 3 sessions. And this one's making new multi-year highs, just has not cared about the volatility. And this tells me that there's some real buyers taking place. It's a real rotation. It's the start of a new trend. We were alluded to it a month ago. And, this is, basically what provides the signal before the story. By the time it starts hitting the headlines, the move's already made. It's too late. So you need to have a way to be alerted when those moves start to happen. And that's what the Trinity terminal does for you. So it's really exciting. Again, I think this is going to provide some amazing opportunities in this sector going into Q1. It's still early enough to where you haven't missed the boat. So that's what I tell people, don't just run out and buy ARQT because it's up. You have to think about these entries in terms of risk versus reward, not just like, oh, it's going up, I'm going to buy it now. So yeah, it's looking good. And these are the names that have been driving this market higher. Well, not the overall market, but driving the sector, the biotech sector. It's no joke. And then you got those names like Amgen and Merck and Pfizer that are looking to come back to life. And these are stocks that they're worth a lot of money. and they
Yep.
can absorb a lot of capital. So
There was a name that I saw that popped up on your screener, and this is a reminder that in this environment, if you can see the price momentum start, there's no coincidence in biotech and deal flow. So Sidara CDTX started the year somewhere around like 20 bucks. It started to propel and move in around
yeah,
July, and then what happened? Merck bought them, and Merck just doubled their price. So this stock's gone from 20 bucks to 218. That's the
crazy.
environment we're in an M&A momentum driven environment. There's going to be a lot more deal flow moving forward. So check out the Trinity Terminal. Gianni, it is 9:20. Don's going to come on, throw on some music, confuse us, probably some Chapel Roan. We'll figure it out. But thanks for joining us. Anything else you got going on today?
Yes, I have a terminal masterclass at 3 p.m. Eastern. So I'm going to be taking everyone through the mechanics of this Trinity terminal and tying it into the methodology of how we actually select for entry. So it's going to be a great class, 3 p.m. Eastern today. It will be recorded if you can't attend live. So I think we have a link in the chat here if you want to join us. It's not too late. So 3 p.m. Eastern today, looking forward to it. And it's going to be a great session.
Awesome, Gianni. Well, thank you so much. I hope you have a great day. Everybody, Don is coming up in a moment. We will be back. I will be back later this afternoon to do a preview of NVIDIA earnings. In addition to that, we will be a very busy day. Pay very close attention to what everyone here at all of our experts are talking about. It's not just about NVIDIA today. It's about biotech. Gianni's going to walk you through that in his masterclass at 3 o'clock. Still opportunities. Click the link. Gianni, thank you so much for your time. I hope you have a great day.
Pleasure as always, Garrett. Thank you.
All right, everybody. I will talk to you soon. Here comes Don with Not Van Halen. Have a great day, everybody.